Welcome back. Auto parts maker Linamar has reported third quarter results. The company said sales and earnings increased compared to last year, and the company has initiated a normal course issuer bid. That's a share buyback as a way to return cash to shareholders. The company, however, expects sales and operating earnings to decline in the fourth quarter. Let's speak about it with Linda Hasenfratz. She, of course, is executive chair of Linamar. Linda, sales were, thanks for joining us. First of all, it's always great to talk to you about this company. It's an important one, of course, to our viewers. Sales rose by 8% to just over $2.6 billion. Normalized operating profit rose by 14%. So you had strong growth in both sales and operating earnings. And you say free cash flow is the real star metric of the quarter. Explain how you see these results.
Yeah, absolutely. We were very pleased with our results in the third quarter. Markets are a little soft at the moment. We're definitely seeing customers shutting down to normalize inventories somewhat. We're expecting the same in the fourth quarter. So we were really pleased to still see a strong quarter of double-digit operating earnings growth, actually in both segments and overall. And top-line growth, as well as a very strong quarter for free cash flow. So almost $300 million of free cash flow, which was an excellent performance and putting us well on our way to a really strong year for free cash flow.
Tell us more about the market for auto parts. You, in the news release, refer to the markets as being soft in both segments, and that's the auto parts segment and the industrial segment, which is most people understand as being your Skyjack products. And CEO Jim Jarrell refers to a challenging time. So both of the senior people quoted in the news release today, telling the message to investors is that the markets are not as the markets for auto parts are not as robust as the company would like.
Yeah, so on the auto industry side, we're definitely seeing some softening up of volumes. I think what we're seeing is vehicle inventory levels on dealer lots getting a little bit higher than what our customers would like to see. So they're pulling back a little bit on production, and that's pulled back obviously on the requirements for us. So in the third quarter, we saw both North America and Europe down, sort of 4 to 6% in terms of production volumes overall in the industry. We're expecting continued decline, maybe not quite as much in North America, but a little bit stronger even in Europe for the fourth quarter. And hopefully that gets inventory set to the right levels, and we will see things level off for next year. On the plus side, we've got a lot of business launching, and that's really helping to offset any of the market softness we're seeing on the auto side. In the industrial markets, our agricultural business is up in double digits. The ag market is down this year, but we have a very strong backlog at our MacDon harvesting equipment business. So they're seeing great growth. We also did an acquisition in the space this year, so that's helping to drive growth there as well. And lastly, on the access side for Skyjack, we're seeing a bit of a pullback in the market in the back half of this year, but an expectation for that to start to see some modest growth again next year. So, everybody's in a little bit of a different place. But the good news is with market share growth and a backlog of business, we're still growing.
What's the key to increasing market share in a difficult overall market?
Yeah, actually, it's interesting because I in some ways feel like this is one of the more opportunistic times to grow in the industry, which may sound counterintuitive, but in fact, what we're seeing is an enormous amount of takeover work opportunities. So we are actively quoting and winning hundreds of millions of dollars of takeover work. So what that is distressed suppliers who, it's been a tough couple of years coming out of COVID, and now with volumes, softening up a little bit, but also more importantly, all the investment in electrified platforms that are going, nowhere soon. There's a lot of distress out there. So we're quoting a lot of work. We've won some already, and as I say, we're quoting hundreds of millions of dollars of work. So we're pretty excited about that, because a big part of Linamar's philosophy is keep our equipment flexible, which means that we can retool our existing equipment for new programs. So, this work that we're quoting, we'll bring it in, we'll put it into our existing facilities on existing assets, better utilize capacity, and get growth going even in a soft market.
You refer to the share buyback, formerly known as a normal course issuer bid or an NCIB, as being long awaited. How long has the board of directors been looking to buy back shares?
Yeah, it's something that we look at as a board every quarter. So capital allocation is obviously always a topic of discussion at the board. Where are we looking to invest the cash that we're generating? I mean, our priorities are always, number one, have a strong balance sheet. We like to keep a prudent, conservative balance sheet that keeps us flexible to be opportunistic when we need to and not carry a lot of debt. So that's priority one. Priority two, growth. So in investing in growth, whether it be new programs, new equipment, acquisitions, innovation. And then next priority is returning cash to shareholders. So historically, that's been mainly through a dividend program, although we have done share buybacks before. We have heard from our shareholders that they would like us to prioritize share buyback in circumstances where we feel that the share price is undervalued. So we heard that message loud and clear, and we are absolutely prioritizing the share buyback because we do feel that our share price is highly undervalued at the moment. So we approved the NCIB, and we'll be out in the market within a couple of days.
Linda, thank you so much, as always, for joining us to talk about these results. Linda Hasenfratz, Executive Chair at